Neftali, we got Marshall on the line. What do you want to ask him?
If you had to choose or to pick like just one skill to master, what would that be?
I would choose the one that you think is going to be most fun for you, or the ones that you can bring value to the table for your partners, because you want to be in this for fun, really. I mean, in the bottom line, you don't want to hate doing this.
Hey, I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this podcast is different from everything else out there. I bring together new and aspiring investors on each and every episode and let the aspiring investors ask the questions that they need answered. And if you're an aspiring investor yourself, you probably have the same questions. So before you get to this episode that we have prepared for you, make sure you hit the subscribe button and that little notification bell to make sure you get notified every time we post a new episode. And now, enjoy the show.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show. We got two amazing people on the line with us with another of our Ask the Expert episodes. We have Marshall Sykes, a guy with a lot of experience, and Neftali Palma. And that said, gentlemen, welcome to the show today.
Thank you.
Thank you for having us.
And as is custom, our experienced investor, Marshall in this case, is going to be up to the plate first. So Marshall, tell us a little bit about yourself, please.
I actually grew up in a real estate investing family. Believe it or not. I know that's kind of unique. My dad was retired. He retired from the Army and decided he wanted to work for himself. And so he learned the building trade. Him and my mom would build two houses at a time, and they'd sell one for living expenses and keep one as a rental. And in my teenage years, I helped them build some of the houses. I kind of put that in the back of my mind and thought, well, that's nice that they get extra sources of income. My dad always preached that to us. I went and got my engineering degree at NC State and then joined the Navy as a civil engineer corps officer. Kind of put that in the back of my mind. And then fast forward 10 years or so into the Navy, I decided, hey, sources of income when you retire sounds pretty good.
Yeah.
So why don't I think about buying some rental property? So I explored that. My wife and I ended up with about 10 single family homes. And so we had a little portfolio there. Then I heard about multifamily. I've done some switch into that. I'm a general partner on 15 deals in multifamily. And I really enjoyed the multifamily experience and atmosphere of networking.
Yeah, it is a nice community. I think what's really interesting is when you meet other people in your field, it doesn't seem to be competitive. It's like more people are more willing to partner with you than they are to undercut you or get you out of deals. But anyway, Marshall, first of all, thanks for your service. I appreciate that. And we have a lot of similarities there. I picked up a handful of single family properties as well and got into it that way. What were some of the challenges you faced transitioning from your career in the Navy and single family homes into multifamily?
You know, it's anytime you go into commercial real estate, you really have to understand it. And it's a different ballgame, really, because it's less individual and it's more team atmosphere. You have to partner with other people for the most part, especially if you go with big multifamily, which is what I focused on. I think the challenges I had were kind of learning the lingo, finding the right trustworthy partners to do deals with, and even kind of I do a lot of investor relations on raising capital, and it's doing that part and learning how that process works, and kind of sales is a little different for me since I was an engineer, construction engineer my whole career. So it's a little different for that perspective. But so those are the kind of things that I had to learn.
It's definitely different. I think there's a lot of nuances, and you came from a field that has a lot of application to what we do. Now, with your engineering background, do you do a whole lot of like the value add or the construction management part for the teams, or you just do the investment management?
I assist on that, and I give input and advice. But I had chosen not to do that full time. I think I decided my value to the team is more served in my greater network of my 30-year career. And so I wanted to really leverage that for my team versus actually doing the asset management or the construction management, which I did my whole career in the Navy and at ExxonMobil.
Okay. Now, was part of that because you were tired of doing that, or was there something else too there?
You know, I think for me, it was the way to ease into being a partner was through using your network and raising capital, while other people might know what their roles or have done roles like that before in construction management or asset management. I decided, hey, I want to do the capital raising piece and learn that, and then kind of understand how the deal process goes
Mhm.
and the asset management piece after the deal's closed, and then decide if I want to do that in the future.
Okay. So you started out leveraging your network, basically bringing equity to the table for sponsors. And if I understood you correctly, it sounded like you kind of started that direction also to learn the business and how to understand the whole picture as well.
Exactly. And there's a lot of different facets to the multifamily space, commercial real estate. I wanted to take my time and leverage other people's experience and learn from them.
Yep.
As I did the deals, I felt like I could learn the best that way. The networking with investors was easy for me. I really enjoy that. And I think if you're looking to get in this business, I think do what you enjoy first and what the partnership needs the most. And you can always switch to a different role at a later date.
Yeah. Yeah. And I agree a lot. I mean, you're talking about taking a minor role up front to learn the business, which I think is really, really smart. And you also mentioned, do something that you enjoy and something that you're good at to be able to get in and learn the business. And that's something that I think a lot of new investors, really need to hear and take to heart. You don't have to know the entire business up front. You've got to be able to find ways to add value in whatever way you can. And if you can do that, you can get in and learn the other facets of the business. So that said, how has your career evolved since you started?
I've done single family homes for over 20 years, but about 4 years ago, or 3 to 4 years ago, started hearing about syndications with multifamily. And I was always fascinated about multifamily and thought after I got out of the Navy, I would go into buying apartments. But I also thought only the big corporations buy apartments, and it's just the individual really can't do that. And then I heard about syndications a few years back. Started as a limited partner, a passive investor, and I invested in a few deals so I could learn kind of how that worked and to see if it was real or not. Sometimes you think, hey, is it really real or not? Or, and you have to jump into it kind of before you understand it all. So that's kind of what I did. I started as a passive investor, learned that piece, and then I joined a coaching group that provides the structure I need for the partnership as well as the deal structure.
Yep. Nice. I think the coaching programs, I know that I jumped into a coaching program when I started out. Very, very beneficial. Helps you, I guess figure things out. And one thing I always appreciated from the coaching programs is the network you get from the coaching programs as well. So, I appreciate you sharing that. Let's switch gears slightly here and talk about one of the projects you've done. So pick your first or your favorite or your most recent, and let's discuss it a little bit.
I'll pick my first one a little bit. I was a deal in Birmingham, Alabama, and it was just around 100 units, not huge as far as multifamily, but about the low end of what we are looking for. It's 40 years old, Class C property that had some potential, and we were going to do a value add. We're doing a value add strategy on it. All that sounds really good when you're on paper, but when you actually close the deal and start the work, that you start finding things maybe that you didn't expect. And one of the things we found on this property particularly was the exterior sewer lines and water lines are pretty old, right? And it's 40-year-old properties. We had some repairs that we had to do there. So if you're not prepared for that, you don't have contingency in your plan, your business plan, that can hurt your bottom line. And so that did set us back a little bit, but all the same, we continued with the renovations of the interiors and some of the exterior work, the lighting, the security, that type of thing. And now we've turned the property after a year and started to get it into position where the value adds almost complete, and we can stabilize the property now.
Nice. And something you mentioned made me smile. When you get into those older properties, I mean, even when you do due diligence, there's a lot of things that you're just never going to find. The status of the plumbing, it's all behind walls and underground, so you can look at certain things, but you never know until stuff starts breaking in some cases, or until you start renovations and you start, pulling up flooring or things like that. It can be Pandora's box in a lot of times.
A lot of times in due diligence, we'll send a video down the sewer lines, right, to see is it in good shape or not. So we're doing our due diligence on that. We're walking the water lines to see if there's any water leaks that aren't discussed so far. But all the same, you can still find issues.
Yeah, we've had a couple, and we do the same thing. We have sewer scoped, and the stuff that you can look at, you look at. But we've had water main breaks and all kinds of fun stuff. But I guess it's a buyer beware. When you're buying a 40-year-old property or 50-year-old property, you're going to have problems that pop up like that. And I say that because most of my portfolio is 70s and 80s vintage, and we've encountered a lot of that stuff too. But so it sounds like you guys have come full cycle on this deal yet, or is this still one you guys own and operate?
No, we still own and operate it. We're not full cycle yet. We're at the early part of the stabilization process. And so, our plan was a 5-year plan originally.
Mhm.
We're about a year and a half into it, I guess.
Okay.
So we got a little bit of time on that one still.
All right. Sounds good. Yeah. And if you don't have to sell right now, it might not be a good time to sell now anyway. So good point. Well, glad it's going well so far. And, stabilization is a fun part where you can actually, in most cases, really ramp up the cash flow. So good on you guys for getting that where it's at. Switching gears one more time, something I'd like to ask everybody on the show is about their motivation. So what is your big burning why?
I think for me, it's my career and my family background, I guess. It just plays so well into multifamily space. And I've always enjoyed it. And when I had the opportunity 2 years ago to go full time with this, I decided, hey, I'm going to go for it and see how it goes. And I've been in, like I said, 15 deals over those 2 years. And it's just been an amazing ride. It's some hard work for sure. There's a lot of trust factor. And there's also a lot of work after the deal's done, right? The asset management piece is very tedious at times. I try to help all my partners out and give advice on that piece as well, even though I'm not the asset manager on the properties. I try to do that. So it's been a great ride so far on that.
Yeah, well, good for you. So last question for you, and then we'll bring Neftali on. But what's next?
Yeah. So I think for next for me is I'm looking at 2023. I know the markets have changed a little bit since from 2 years ago.
True.
So I've got to think strategically. What's 2023 the best way for us to go forward? Do we do a lot of deals, or we do a smaller amount of deals? Yep. Also, what markets do we want to be in, and how big do we want to go? On particular properties, is it easier to do 100 units, or is it going to be okay to do a 300 unit?
Yep.
There's some risk, and there's differences between the two.
Yeah, there's definitely.
So we're looking at that on the strategy side right now, and we'll probably sit down the next 4 weeks and figure that out.
Yeah, first end of the year, first part of the year are always good times to sit down and reflect on what's working and chart the way ahead. And amazingly, I'll be doing the same thing in the next couple of weeks. So get my New Year's resolutions and pull out my goal sheet that I made a year ago, and see how many I've checked off. And the answer is not as many as I wanted to, but we'll get there next year. Well, cool. Do you envision any drastic changes with how the economy's evolved over the last several months, or do you think it's going to be kind of business as usual for you guys?
I think in any market, any economy, I think it's smart to work through your underwriting, change your factors if you have to a little bit, adjust them. But you can still buy properties right now. Yep. You just got to buy them smartly, as any time you can, in any economic situation. Yeah. It's just a little bit harder right now with the rising interest rates. It's harder to make things pencil out, but we're still going to go forward with it. We're going to be more strategic on the 200 to 500,000 or greater markets of population. Yep. It gives you more diversity of the economy, less risk there.
Yep. Yeah, I agree. I've had I mentioned I've had a lot of 70s and 80s vintage properties. We've also had a lot of smaller markets. We've had a couple of properties in markets less than that 200,000, and it creates its own set of challenges, is all I'll say. I mean, it's sometimes difficult to get contractors. It's difficult to get good property management, but I don't know if there's a magical, spot where things change. But yeah, the larger the metro, there's always trade-offs, So anyway, good points there.
Yeah.
Hope you guys get a good path forward.
If you're going to go with the smaller markets, I think you need to be nearby, or at least whoever's asset management needs to be nearby it and understand the market really well.
Yeah, absolutely. Absolutely. But yeah, so anyway, switching gears, Neftali, we got you on the line here. How are things going for you today?
Hey, first of all, thank you for having me, Brian. Everything is going pretty good. I'm just excited to be here and being able to ask questions to successful investors like you guys.
Awesome. Well, happy to have you, and do us a favor. Tell us a little bit about yourself.
Yeah, sure. So I was born and raised in El Salvador. So I came here about 10 years ago. My parents are still over there in my country. Since I came over here, things are a little different, in those countries. I always had dreams and I knew that this was the country that I wanted to be in. So I came in here like in 2012 and I started working in construction because my family was doing that. My brothers, they were working in construction. So I joined them, start learning the trade, pretty much doing remodels, pretty much doing maintenance and apartment buildings. I liked it, it's something that I still do at this point. I own a small construction company, but time went by, and I started trying to look for something else. I wanted, because I was working like pretty much 7 days a week. I said like, okay, is this really the American dream? I was just questioning myself, and I remember one night I was just saying to myself, hey, it's got to be something else that I can do here. And that's when I started like digging in what else I can do, like side hustles and all that. I remember I joined just network marketing, and I pretty much was there like for a year. I went to some seminars, convention. I started kind of reading self-development books and all that. So that helps me a lot and helped me realize I didn't make any money on that though, but I learned a lot. Fast forward to 2015, I got involved in trading cryptocurrencies, Bitcoin, Ethereum, and all that. Like maybe you're aware of it. I started doing that. I would say I didn't get like professional on it, but I made a good amount of money. That helped me realize that if you really want something, you can learn how to do it and, of course, be good at it, But fast forward to this day, I always wanted to, I didn't grow up in a family that they own multifamily or nothing like that. So for me, I always knew because I was doing maintenance on apartment buildings and I knew the owners and I would see their lifestyle. They will have like houses on the beach. So that made me realize that the real way to make your money work for you is just to invest your money, like be smart with it, But at this point, I didn't know what to do. I didn't know where to start, I remember I read Robert Kiyosaki, his book. I read his book, Poor Dad, Rich Dad, and but still, I didn't know someone to pretty much tell me where to go, what to do exactly, But I kept learning, and then one day, like I would say like 5 months ago, I came across two program that help you understand more. And so I paid quite a good amount of money for it. But I've heard you say in some other podcasts that it's not pretty much the information that you get, but the network that they put you around. I would say that's the thing that it's helping me right now. That's why I'm here right now with you, and I'm super excited, honestly.
Sounds like an amazing journey, and I very, very much appreciate it. And we talked about this a couple of weeks ago, but I spent a little bit of time in El Salvador, beautiful country, but I think the understatement of the year is, just saying it's not quite like it is here. Anyway, very much appreciate what you said. And you mentioned, what I've said about coaching programs earlier. I think this is going to be episode 300 and something. I stopped counting a long time ago, but if you were to go back and listen to this podcast from beginning to end, you'll learn everything that you're going to learn in every single one of these coaching programs. There's nothing that's in those coaching programs that hasn't been on this podcast, But anyway, one thing that is nice about them, like I said, is the network, but also the commitment. Something about writing a really large check that makes you commit, and I wish there were a way to do that without parting with that much money, but I did it, and Marshall did it, and I don't know, that commitment really helps. But
I did it too. I remember I was pretty much shaking when I was signing or giving them my credit card. I had to sell my truck, honestly. And that's how committed I was. Like I was talking to my wife And I was like, hey, I think I'm gonna do this, but this is literally, I'm burning my ships right now. So I have like no other choice to make it work.
Yeah.
So I'm in a point that I'm on the journey, but I'm hustling right now and learning every day.
When I started my coaching program, we had recently sold one of our single family investment properties. And so I had the money in the bank and it was earmarked for, the next real estate investment. But yeah, same thing. It took me a little while to, am I really going to pay that much money for coaching? I don't know. But I did put it on my credit card so I'd get the points. And I think I got about, $1,500 cash back for the investment. It probably wasn't that much, but anyway, one question for you, and you talked a little bit about it, but if you had to boil down your big burning why to, something a little more succinct, what would that be?
I would say one of my big reasons that I'm doing this, first of all, it's quality time with my family. But also my parents are still living in Salvador, and I'm hoping they come to this country maybe in the next year or so. So I want to be able to provide them and give them the best life. That's one of my burning why. And the other thing is that I'm about to be a dad.
Mhm.
My wife is pregnant right now, and so right now I want my baby to have what I didn't have.
Mhm.
And I want to be there for him, like to have that quality time with my wife and with my baby too. And also it comes down to giving back to, so I know in my country it's rough for a lot of people. I grew up in a community where we didn't really have much, honestly, and it's still to these days a lot of people over there, they don't have much. So one of my burning whys too is being able to go back and help those people, like create a foundation over there and help those people, like it can be with education, with clothes, or with anything that I can help with.
Yeah, absolutely. Absolutely. Appreciate you saying that. And the most common answer on the show for Big Burning Wise family. And yeah, you mentioned help mom and dad and help my soon to be born child, but congratulations on that and wish you the best of luck with everything. Now comes my favorite part of the podcast where I get to say, Neftali, we got Marshall on the line. What do you want to ask him?
Hey, Marshall. Pleasure to be here and being able to ask questions. So I have an important question for you, one important for me. What would you tell an investor like me that is just starting?
I think that I would say congratulations, you're starting, first of all.
Thank you.
That's a good thing. And you're thinking about your future. I think that's the big thing. And what you said about your mom and dad coming here, I think that's a big why as well. But I think as far as, let's say on the limited partner side, if you're a passive investor, I would say that, you can learn a lot, as Brian said, on the free resources. You can look at a lot of stuff on YouTube. I watched a lot of YouTube videos. I attended a lot of webinars that were virtual webinars, I guess, for $100 or less. Sometimes they're free even, or some meetups are free. So I think all those things are great things to learn and start your networking journey. I also have a free resource on my website for my top 5 investment criteria. So you can get free resources from different people's websites. I think that's a great one. As far as being a general partner, I think, I think that's what you're aspiring to be. Then I would say, join the coaching program, which it looks like you've started that a little bit as well. But also just find a mentor, maybe even within that coaching program or outside of it. But I would continue the network, and not just one mentor. Maybe you ask a handful of people, because when you have 3 or 4 people you can call, you will get a few different perspectives on how to handle something. And I think that's important to be able to do that. But when you start doing the deals, make sure that your partners are very trustworthy. You don't want to be with the deal unless you fully trust them and they trust you, because it will create some kind of conflict that you really don't want down the line. And these are long-term commitments, right? So you're going to want to make sure you vet your partners and the trustworthy piece of it.
That's a great answer. Not definitely. I have one person in my team right now. So it's just 2 of us and my wife that kind of helping in the background. But he's a go-getter too. So he's like we're like on the same page. We want to get it bad both, So other question that I have for you is, if you had to choose or to pick like just one skill to master, what would that be?
There are a lot of different skills,
Mhm.
a lot of different roles that are played in the partnerships. I would choose the one that you're going to have fun with, because you want to be in this for fun, really. I mean, in the bottom line, you don't want to hate doing this. It should be fun. I would choose the one that you think is going to be most fun for you, or the ones that you can bring value to the table for your partners.
That's a great answer.
Yeah, one thing I'd add is there's two ways to look at this. There's short term and long term. For getting into the game, I would say, what is the skill that you have, or what is the skill that you can add to your skill set that'll get you in the game the fastest? That's the short game. But, long term, do something that you enjoy. Make sure you enjoy it. Make sure it's something you can do for long term. Otherwise, this is going to be another job for you. But yeah, a lot of times getting into the game is the important part. You have to be on the playing field. But anyway, I'd offer that up as, kind of a two different ways to look at it. Short term, how do I get in the game the fastest? And then long term, how do I stay in the game the longest?
I mean, you may not want to do syndications. You may just want to buy a smaller apartment, a multifamily yourself, and go that route. There's a lot of different routes here, but if you want to do syndications, I think what Brian's saying is correct. You want to get in the fastest. And the way I did that on my first deal is I raised capital. I didn't think I would want to raise capital, but when I started doing it, I really enjoyed it. So I kept doing that.
That's awesome. No, thank you both for the answers. I think that's a really good point. Like for me, I feel like I've been in construction like for the past 10 years or so. So it's something that comes like pretty much like natural for me is just being able to see those properties and see what it needs to be done. And in my mind, I already see how it's gonna be done, because that's what I do pretty much right now daily. And I don't want to do that for the rest of my life, of course, because it had me tied down to pretty much 9 to 5, job. But something that it attracted me, it's the asset management part. I feel like that will be my strongest, but I also want to push myself and add more skills to my pocket.
Yeah, I think the asset management piece is right up your alley, though. I mean, you're going to come in with perspective of doing the construction piece that a lot of your partners aren't going to have, and so I would leverage that, and you can leverage that as an asset manager, because part of asset management is the construction management of those crews that are doing the renovations. That part you can interact with them, and you can make it high quality and efficiency and getting the crews there on time. As Brian was mentioning, sometimes it's hard to get crews there.
It is.
I think that's a skill set that you can bring. Those skills you really bring to the table right now.
Yeah, absolutely. And asset management is really where the rubber meets the road. Marshall said it earlier. It's a lot of work, and it's also probably the most important aspect of apartment investing is the asset management. And I think in a lot of the coaching programs, if I had to, poke one hole into the coaching industry, is there's not a whole lot there about asset management. So it ends up being a marathon, whereas, everything else tends to be more of a sprint. Let's get the property closed. Let's get things done. And then the marathon begins. So
I know you kind of went over these, like you were talking about the market and how it's right now, interest being high. But I just wanted to ask you, so what are your thoughts right now on this market I know the interests are pretty high right now. So what are your thoughts, and what markets are you looking to be like sponsor or a guarantor, or if you are willing to?
Yeah, I'm sure I can help. Well, I'm living in North Carolina now, so
Okay.
I like the Raleigh, Charlotte, Greensboro, and Raleigh and Charlotte for sure. They're Class A, are the top markets, some of the top markets in the U.S. They've been that way a long time, and I don't see that stopping. The population continues to grow, and the state favors economic growth. Wilmington, North Carolina is another smaller market, but it's still over 200,000 folks that live there. And Greensboro, Winston-Salem is another market in North Carolina. So I like all those, but also I'm invested in several markets in Florida. So I like those as well. Tampa and Sarasota area, also in Jacksonville, Florida. I like that market. Florida people, again, population increasing, continues to increase there, and rent growths are still high. And man, Jacksonville doesn't get a lot of love on the in the big stage across the country. A lot of the other Florida markets do, but Jacksonville itself had a 26% year-over-year rental growth. I mean, that's just amazing amount of growth in rents. I also like Phoenix still. I've been looking at that market of late, and I still like that market as well.
Yeah. When people ask me about markets, I think that you ought to also and Marshall alluded to this. He didn't say it explicitly, but look for the markets where you have a competitive advantage already. What's close by. Marshall's in North Carolina. A lot of North Carolina markets are very hot, and great places to invest. But where do you have a competitive advantage? What markets are you close to? And what markets do you know well? I don't know. I'm making a guess here. I mean, Jacksonville's a big Navy city. Marshall, were you ever stationed at Jacksonville?
Unfortunately not.
All right.
So any of my peers that went there stayed there, it seems like.
Well, there you go. So yeah, look for places where you have that competitive advantage. Either the area, you've lived in the area, or you have good reasons to go there. That's what got me started in South Carolina. I was in DC. My wife's grandmother and her cousins all lived in South Carolina at the time, and we were making 2 to 3 trips a year down there to visit. And, Columbia, Greenville, Spartanburg, those were all really good markets to invest in. We were going in there anyway. We had somewhat of a competitive advantage because we knew a lot of people. I had been going to that market since I got married my wife in 98. And that's really what helped me, decide on that one. But there's lots of good markets, lots of good places to invest. Instead of looking for, what market meets the most metrics, I'd say flip it around and say, where do you specifically have an advantage, and try to exploit that advantage.
Thank you both for your answers. Appreciate that. And what do you think about the markets right now? And a lot of people saying that, oh, maybe a recession is coming. Like, how are you taking that point right now?
I think there's people that talk both sides of that right now. I mean, a lot of people do think there's a recession coming. Yeah, I don't really know for sure if there is. They've been talking this for a year now. So is it really going to come? I don't know. But you got to really think through it.
It's like, the Game of Thrones, winter is coming, right? Where you say it long enough, it's going to happen. I'd just say, with recessions, is there probably going to be a recession coming up? Yes, is the answer. When and how long and how protracted, who knows, is the answer. But I think just have a little bit of flexibility in your plan. Make sure you really think about, okay, what happens if? And my way to beat recessions is just make sure you have a long enough time frame to be able to weather storms. And if you've got a long enough time frame to weather storms, you should be okay, with whatever the economy throws your direction. It's more complicated than that, but I'm going to stick with that at the time. And speaking of, we are out of time. So one last question for each of you. Marshall, you get to go first. How can listeners learn more about you?
My website is capitanoinvestinggroup.com. You can go on there and learn more about me, connect with me on LinkedIn as well. We always have properties we're looking in different markets all the time. It seems like we have a lot of deal flow. So definitely link in with me if you're interested.
All right. Sounds good. And we'll put a link to that website and his LinkedIn profile in the show notes. And Neftali, same question for you. How can listeners learn more about you?
Yeah, they can go to my website, palmacapitalinvestments.com, and they can find out more what we're doing on the website. And also on social media, you can find me on Facebook or Instagram and LinkedIn as Neftali Palma.
All right. Sounds good. So we'll make sure those links hit the show notes. And once again, gentlemen, thank you very much for coming on the show today. Appreciate your time and had a lot of fun today.
Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community yet, which we call the Tribe of Titans, you are missing out. Get 30 days free by clicking the link in the description to this episode, or go to thetribeoftitans.info, and we'll see you there.